Hey everyone, welcome to Smart Investing. Uh, Today is June 22nd, Thursday. This is video number 2 out of 5. So I'm going to go over 3 bank stocks. We have here the 3 bank stocks that we're going over today. It will be ticker symbol PPBI, ticker symbol CURO, and ticker symbol FNB. First stock up is PPBI. PPBI at $20.37 a share. Market cap close to 2 billion. Volume is at pretty much half a mil. And we're going to take a look at the rest of the first page there. So dividend yield, I usually work my way from the top to the bottom, but that was just the first thing that popped up. So I apologize for that. So from left to right, I just look at this first 52-week high and low. Difference of about $20, so that differential is okay. Earnings per share is at close to 3. Then we have here, okay, PE ratio is close to 7. Dividend payment 1.32. It's looking undervalued. Can we use this for a day trade? Not sure. I doubt it. But there's other stocks that are better than that. Whoa, monster moves here. Look at that drop. Right away, I just noticed that. Aside from this one, I mean, this was a fake rally, overextension, but back to its average, and it just looks pretty flat, which this pretty much looks normal to me right about now. But based on its past history and overextension, you can see it's under its 200 EMA. And it hasn't even caught up to its 20 EMA on the 5-year. You can see here it's way below, on the 1-year, way below its 200 EMA. It has a bunch of catching up to do. So moving on to the analysis part of this, we're going to see what's going on. Based on 7 analysts, I don't really like looking at this, but I do it for you guys. Some people like to see that, get some insight. 7 analysts. So we have here, I don't know, 40%, a little over 40% of people said it is a buy, and 57% said it was a hold. So don't do anything at all, pretty much. Value was the highest rating, obviously because it's cheap. Then everything else pretty much was pretty low. You have momentum at 2, quality at 4, growth at 4. Well, quality 4.5, really, if you round it off. Overall rating was a 2. Consider that weak. It's hard to judge this company, but we're going to see and deep dive more into the earnings and all that. We have here in Q2, they beat, then they missed here, then they missed here, and ever since Q4, they have been downgrading earnings estimates. And so far, they have underperformed the last 2. So that's not a good look, and they're trying to lower that guidance. And if they miss again, I wouldn't be surprised if the stock drops once again. Annual estimates for the key indicators. We have ROA at 1%, ROE at 10%. 2.9. Decent numbers. Their margins are pretty much mixed, which that seems pretty normal. Debt 87%, typically lower than usual. And we're gonna jump into the cash flow because this is not, it's not a big company. It's a small market cap company. So, we're just gonna jump right into the cash flow. I want to see what's going on there. So 400 mil. So we're looking about 250 left. Yeah, about 250. So yeah, these guys are actually cash flow positive. So we have about 800 million in cash flow approximately. And when I give that number for cash flow, it's approximately, it's not exact. So for this stock, I mean, they're cash flow positive. I don't see any growth. I don't see any day trade for this stock. 52-week high and low. I mean, that's not a big range. It's hard to say. The earnings are okay. If the earnings were a little bit better, I would say watch list it. I know the cash flow positive, and then the income just doesn't even do it. Like I don't see numbers that allow me to say like, oh, this is the best strategy for this stock and this is for this. I'm actually gonna say no decision and I'm just gonna leave it neutral. So I'm not saying yes or no. Basically I'm just gonna say hold out. I need further confirmation. So basically it needs more time to be adjusted to see any improvements or any worse conditions. So I'm just pretty much giving this company more time. Again, I'm not saying yes or no. If I had to say yes or no, I'd lean more towards the yes for a watch list. But as of right now, no. It just needs a little bit of work. So I hope you guys are satisfied with that decision. So I hope you guys didn't feel like I'm leaving you out of the loop. That's just the decision that I come up with. I don't see any reasoning to say yes or no. So moving on to the next one. Ticker symbol CURO. This looks like a holding group. Gonna look at the last 5 years. Still a downtrend. Trying to look. There we go. Stock is at $1.61, 52-week high and low. Market cap is 65 mil. Awful, awful. Earnings are awful. PE is not even telling me. This stock, I wouldn't be surprised if this stock is gonna get delisted soon. 52-week high and low, like I said, not even $10. Way too cheap. It's close to even being under $1. The chart looks awful on the 5-year, on the 1-year, on the 3-year looks flat. I mean, awful stock. I'm not even gonna review it to be honest. I'm just gonna say no right off the bat, and I'm still gonna look at the rest of it. But I'm sure these numbers are awful. Quality, they gave it the highest rating, and overall rating was a 2 out of a 5. I don't see how. All these earnings estimates are like negative or close to negative. That's not a good look, not a good sign. Very bad conditions. This stock is suffering. We have here negative equity, negative earnings 2 years in a row. It looks like it'll be negative earnings 2 years in a row. Margins look like crap. Their debt levels have reached over 100 in 2022. That's unheard of. Very unheard of. Cash flow, I'm sure they're negative. If they're not, they're going to use that to offset costs, their earnings, and everything else in between, just to survive. And it doesn't look like it. So we have, let's say, 300, so 800. So what? Let's say, I don't know, 30. Sorry, 22 million. 22 million in cash flow. Oh, I didn't put do not disturb. Sorry about that. I don't know, 22 million in cash flow, positive. So yeah, 22 million in cash flow. And again, with their net income, that still can't support the offset for their net income. So obviously I said no, and I'm gonna stick to that decision. Definitely stay away from this stock. And we're gonna go over the last one, ticker symbol FNB. FNB, $4 billion market cap company, pretty decent. Volume at 1.68 mil, very active stock. Share price is at $11.24. Earnings are pretty low. Dividends are crap. Dividend yield, it's okay. PE ratio, it's okay. Slightly undervalued, but it can do better. Price to book at 0.7. Then we have here the 5-year looking flat. The 1 year, it almost reached, you can see here, let me zoom in a little bit. You can see it just went above its 200 EMA for like, I don't know, a few weeks. And then all of a sudden, waiting for further confirmation for a breakout, it did not. It retraced and started to go back down. So pretty much looking at the retest for that, which I doubted. So yeah, I don't see this stock doing too good for this year. Anyway, maybe for a day trade if you like shorting. And we're gonna move on to the analysis here. Based on 9 analysts, mostly say buy. So we have a 78% of people rating this a buy. Like always, they're always gonna say buy. Highest quant rating is value, 7.3. Overall rating is 5.8. Overall rating, they gave it a 3, so in the middle. Again, I don't necessarily agree with the quant ratings, but it's just a guideline to see more or less where things are at. Moving on to the earnings, the actuals, and estimates. So we have here flat guidance and estimates. Looking at around, I don't know, 38 cents. So in Q3, they beat, and then Q4 they missed, and then in Q1 they beat. So it looks about the same, nothing lower or higher. For ROA, looks kind of weak. It just seems pretty flat. I mean, the business is not struggling too bad, but it's not doing like any improvements. I don't see any improvements for positive cash flow or net income, margins, equity or assets, nothing. I don't see anything. Net income, revenue, we have here cash flow. We're just gonna jump to that. Okay, annual. We have, let's see, negative cash flow for this company. A little bit under 2 billion. I can't even do the math. So we have 1.22, then 3.06. So we have like 1.6 or 1.7 billion of negative cash flow. I'm surprised. I don't know how people with their companies, I mean, like the board of directors and CEOs, like, management, people that actually work for the company, that they're in negative cash flow, but then they still want to pay dividends. And then to make things worse, they want to like raise dividends. And then, I don't get it. I don't get it. Uh, some people in management shouldn't be in management. I don't know what the deal is. Some people working in their positions shouldn't be just working their positions. To be honest, uh, it's just the truth. I mean, it just, I don't know. People like to be in bad positions um, during worse conditions instead of trying to make improvements and whatever. I know it takes time, but um, this is a company year to year where last 5 years I haven't seen any declines or any improvements. I mean, I don't know what they're waiting for, but definitely it's not bad, but it's not like good, and it's not standing out to me. So again, I'm gonna say no to this one. Respectfully, no. So that was ticker symbol FNB. And that is the last of it. So thank you guys for watching. I have a few more videos to go, and I'll see you guys real soon.